Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Monday, April the 19th, 2010. Well, a continuation of the first time frame downtrend that the market began yesterday, or the previous day, and we have a candle with a lower high and a lower low, continuing that trend to the downside. Now, the previous session's trading, we had a very large red body candle, and that denoted that the sellers made some very large net bearish progress on the day between the open and the close. Today was a totally different scenario. The buyers made net bullish progress today, so quite a bit different than the previous day's trading session. So that does raise some doubt about the continuation of the trend in the first time frame. Having said that, though, the buyers did only make a fairly small amount of net bullish progress. Certainly not as much as the bears made on the net on the previous trading day. So we do have a green-bodied candle, but a much smaller green body compared to the previous day's trading. The bulls did, however, close the market up towards the high, and that suggests that the buyers have closed the market in control, and they've shown some commitment throughout the trading day. The bears certainly lost the commitment that they had when the market was trading down below the previous day's low, and that could be quite important for this market, that when the market attempted to trade down there, the bulls came in and brought the market back up. So the short-term dynamics are not supporting the trend to the downside. The buyers are also keen because they've closed the market up towards or up above the previous day's close. And if we look at the range of today's candle, and that's the distance between the high and the low, we can see that the range has actually decreased compared to the previous day's trading, and that suggests that the sellers are not as eager as they were previously. So we're getting some mixed signals here, with the trend in the first time frame being down. The bulls have not been strong enough to begin a new first time frame uptrend, but certainly the bears have lost commitment. They're not in control. They've lost all of the strength that they had on the previous day's trading. So that sets us up for a potential change of trend to the upside. So we do need to watch the high of the current candle for the potential for the market to begin trading up and continue this second time frame uptrend that the market's been in over the last few months. The only problem there is that we have this potential resistance at the 1200 region, and we do need to watch that. The bulls would like to see a solid bullish close up above that area for the market to test the swing high at around 1214. So that's essential for this market to trade up past there and potentially trade up towards the area of resistance around 1265 that we highlighted previously. There isn't any strong resistance until we trade up to around that level. Now, looking at the Ichimoku indicators, we are trading up above the cloud of the Kumo and a long way up above that, and the market is also trading up above the Kijun Sen and the Tenkan Sen, and that's suggesting that the market is bullish in the medium term and short term time frames. Now, the market has just closed back up above the Tenkan Sen, reflecting that the market's oscillating above and below this area of equilibrium. So we're not as bullish in the medium term time frame until we have good confirmation of probably another close up above that area. Interestingly, the Kijun Sen, which was pointing flat on the previous day's trading session, has now turned up, and that's reflecting the close above the previous close and suggesting that the market will continue in this second time frame uptrend that the market has been in over the past few months. So there is good potential for this market to trade up to the upside. If the market does trade down, there is a lot of support down below where the market's trading at the moment. And we have this area around 1179 down to the Kijun Sen at 1177 as a very strong area of support that the market will most likely interact with next if it does come off. Below there, some other very strong levels at 1169, 1163, and then all the way down to the cloud, top of the cloud and through the cloud, from roughly 1120 down to about 1100. So there is very, very strong support all the way down if this market does come off. To the upside, however, we now have the 1200 region, the 1214 swing high, and then above that only 1265 as strong resistance. So I think we need to watch the high of the current candle and the 1200 region for the potential for the market to begin the first time frame uptrend and continue the uptrend in the second time frame. Watch the low of the current candle and support below.